All right, so are you ready to really dive deep into this crazy world of crypto investing in 2025?
Yeah.
We're not just talking about the theory here. We're talking about someone actually putting real money down $1,000 and jumping into this market.
Yeah.
And we got their story.
Oh, wow.
And trust me, it's way more exciting than reading, some boring investing textbook.
What I think is really fascinating is that they actually documented their entire journey,
Yeah,
the good, the bad, and all the lessons they learned. It's like having a front row seat on a crypto roller coaster.
exactly. So first things first, how did they even approach this? I mean, they didn't just throw it all into Bitcoin, right?
No, not at all. They actually spread their $1,000 across 5 different categories: Bitcoin, Ethereum, Solana, some stable coins, and get this, a brand new altcoin
Oh,
that nobody had even heard of.
ooh, that's brave. Okay, so break down the percentages for me. Do they go all in on that risky altcoin?
Well, they were actually surprisingly strategic about it.
Okay.
They put 40% in Bitcoin, 30% in Ethereum, the big names,
Right.
then 15% in Solana, a coin with some buzz around it at the time.
Makes sense. So that leaves 15% for the altcoin and stablecoins,
You
right?
got it.
Yeah.
10% on that altcoin and just 5% in stablecoins. Clearly, they wanted to balance out that safer bet with the chance at a huge win.
I mean, who doesn't love a good underdog story? But speaking of the market, 2025 wasn't exactly a calm year for crypto, was it?
Oh, no, not at all.
No.
This investor actually specifically mentions 3 major factors that really shook things up.
Okay.
First, regulations. Governments all over the world were finally starting to figure out what to do with crypto, and their decisions had, some pretty serious consequences.
Yeah, because you can do all the research you want, but who can predict what a government's going to do? It's a total wild card.
Exactly. And, some coins, they thrived under these new regulations,
Right.
while others, well, let's just say not so much. This investor even mentioned a few projects that actually faced restrictions or outright bans. Talk about a rug pull.
Ouch. Okay, so what was the second big thing that impacted the market in 2025?
This one's a bit technical,
Okay.
but it's something that any potential crypto investor should really understand. It's the Bitcoin halving cycle.
Okay.
I'm curious, have you ever heard of this?
I have, but to be honest, it still kind of makes my head spin. So maybe you can explain it in a way that even I can understand.
Of course. Think of it like this.
Okay.
Imagine Bitcoin is like a gold mine,
Okay.
and every 4 years, the amount of gold that you can dig up from that mine gets cut in half. That's essentially what a Bitcoin halving is.
Got it.
It's programmed into Bitcoin's code to happen roughly every 4 years, and it directly impacts the supply of new Bitcoin hitting the market.
Okay, that makes sense. Fewer Bitcoin being created, but people still want it, so the price.
Exactly. It's just basic economics. It tells us that if demand stays the same or goes up, but the supply shrinks, the price tends to rise.
So it's like this built-in scarcity mechanism. I'm starting to see why this halving cycle is such a big deal.
It definitely is. And, historically, we've seen some pretty significant price rallies after each halving event. It's honestly one of those fundamental things that you just need to grasp if you're at all serious about crypto.
Makes sense. All right, what about that third big market shaker? You mentioned AI, right?
Oh, yeah. AI-driven trading, it was becoming huge in 2025. We're talking sophisticated algorithms and bots making lightning-fast trades based on, super complex calculations that no human could ever do.
That sounds really intense. What kind of impact did that have on, the average investor like me or you?
Well, it definitely added a layer of complexity and, to be honest, unpredictability.
Yeah.
Imagine trying to keep up with these bots that can analyze thousands of data points in just a fraction of a second.
Nice. So it's not just about research anymore. It's like playing chess against a supercomputer.
It kind of is.
Yeah.
But here's the good news. Understanding the fundamentals, the underlying technology, the use cases, the team behind a project that still matters a lot.
So we've got AI bots making split-second trades, a Bitcoin halving event shaking things up, and governments throwing curveballs with regulations. Talk about a wild ride. But let's get to the heart of it. How did our investor actually do with her $1,000?
Remember that diversified portfolio we talked about?
Yeah.
It actually played out pretty interestingly. Let's start with Bitcoin.
Okay.
It saw a respectable 15% gain.
Okay.
Not a moonshot, but solid, especially considering everything going on.
Yeah, not bad at all. What about Ethereum? Did it, hold its own?
Even better, up 20% for the year. A lot of people were saying back then that Ethereum was the future, and it seems like they were onto something.
Yeah, I remember all the hype around, Ethereum 2.0. It was
Yeah.
supposed to be, a game changer.
It definitely brought some major improvements to the network. Scalability and efficiency got a big boost, which probably contributed to that price jump.
Okay, so Bitcoin and Ethereum did well. What about Solana? That was one they put 15% into, right?
Solana. This is where things get a little tricky. It actually took a hit, ending the year down 10%.
Oh, wow.
It just goes to show you that even a promising project can have, like, a rough year.
Right. It's a good reminder that diversification isn't just about maximizing gains. It's about protecting yourself from those dips, too.
Absolutely. You can't win them all, right? But speaking of winning, let's talk about that altcoin.
Yeah.
The one nobody knew about. Remember, they put 10% into it.
Yeah, that was a bold move. Did it pay off?
Hold on to your hats. It exploded. A 150% gain. Talk about hitting the jackpot. This is exactly why people get so excited about altcoins. That potential for, like, absolutely massive return.
Wow, 150%. That must have made up for the Solana dip and then some. But it also makes you wonder, how do you even find those hidden gems before they take off?
That's the million-dollar question. There's no guaranteed formula. But this investor, they emphasize the importance of thorough research. Don't just chase hype. Understand the project, the team, the technology. That's how you separate the potential winners from the, well, shall we say, less promising ventures.
Makes sense. Okay, last piece of the puzzle. How did those stablecoins do?
As expected, they stayed pretty steady. You know, stablecoins are kind of like the anchor of a crypto portfolio. They're designed to hold their value, usually pegged to a traditional currency like the US dollar.
Right. So, all things considered, did this investor come out ahead?
They did. Despite that Solana dip, their initial $1,000 grew to $100 and $370. That's a 37% return in just 1 year. Not too shabby.
Wow, 37%. That's got to feel good. But I imagine the journey wasn't all smooth sailing. Did they mention any, like, major lessons learned along the way?
They did. They actually highlighted 5 key takeaways that really stuck with me, and I think they're valuable for anyone interested in crypto.
Okay, I'm all ears. What was the first one?
Well, it goes back to what we were just discussing,
Yeah.
diversification. They stress that spreading your investment across different assets is absolutely crucial. It helps mitigate risk and can smooth out that, that wild crypto volatility.
It's like that old saying, don't put all your eggs in one basket. Seems like that applies to crypto just as much as any other investment.
Absolutely. The next lesson was all about patience.
Okay,
They emphasize that the market is volatile.
right.
It's going to have its ups and downs. But if you believe in the long-term potential of the projects you've invested in, it's important to, ride out those dips and not panic sell.
That's easier said than done, though, right? When you see your portfolio dropping, it's so tempting to hit that sell button and just, like, cut your losses.
No, I know. Believe me, I've been there. But they really emphasize the importance of having a long-term strategy and sticking to it. They even admitted they could have actually made even more profit if they had been a little more patient and held on to some of their investments longer.
Interesting. So sometimes the best move is to just do nothing.
Exactly. Sometimes the winning strategy is to just weather the storm and trust that things will eventually bounce back. But of course, that only works if you've done your research and invested in solid projects. Which brings us to lesson number 3. Always, always do your research.
Yeah, it's easy to get caught up in the hype, especially with crypto. There are so many shiny new projects popping up all the time, promising the moon and the stars.
Right. And that's exactly why it's so important to be critical, to dig deeper, look beyond the marketing, understand the technology, the use case, the team behind it. Don't just blindly follow the crowd.
Do your own due diligence, as they say. Okay, what about lesson number 4?
This one was about taking profits strategically. It's tempting to just ride a winning streak and watch your investment skyrocket, but they learn that it's wise to lock in some gains along the way.
So it's about finding that balance between letting your winners run and protecting yourself from potential losses.
Exactly. They admitted they could have secured more profits if they'd taken some chips off the table earlier, especially with that altcoin that went through the roof.
Makes sense. It's all about finding that sweet spot between maximizing your potential returns and managing risk.
Absolutely. And finally, the 5th lesson was all about managing your emotions. This one is huge, especially in a market as volatile as crypto.
Yeah, it's easy to get caught up in the fear and greed cycle, making impulsive decisions that you later regret.
Exactly. They said one of the hardest things to learn was to not panic sell during dips. It's about staying level-headed, not letting your emotions dictate your actions. They said it takes practice, But developing that emotional discipline is key to long-term success in crypto.
So much for emotional discipline, right?
Yeah.
I'd be lying if I said I wasn't a little tempted to chase those altcoin gains myself after hearing that story.
It's definitely tempting.
Yeah.
But remember, this investor took a calculated risk with that 10% allocation to an unknown altcoin.
Yeah.
It paid off big time in this case, but it could have just as easily gone the other way.
That's the thing about crypto, isn't it? High risk, high reward.
Exactly. And that brings us back to the original podcast host, framing this whole thing as like a success story.
Right.
Overall, they turned $1,000 into $3,370, a 37% return in a year.
Which on the surface sounds amazing.
Yeah.
But you've got me thinking now.
Yeah.
Would you consider that a success, given all the risks involved?
Yeah.
Especially with that, like, gamble on the altcoin.
That's the million-dollar question, and there's no easy answer. It really depends on, like, your individual risk tolerance and your investment goals.
Right.
For some people, a 37% return might be totally worth the volatility and uncertainty.
Yeah.
For others, it might be way too stressful.
It's a good reminder that there's no one-size-fits-all approach to investing.
For sure.
What might be a home run for one person could be a total disaster for someone else.
Yeah. Absolutely. And that's why it's so important to do your own research, understand your own risk tolerance, and make decisions that really align with, like, your personal financial goals.
I think this deep dive has given me, and hopefully you listening out there, a lot to think about. Crypto is clearly a complex landscape.
Yeah.
There's definitely potential for big wins, but there are also inherent risks.
We've seen how things like diversification, patience, and emotional discipline can play, like, really crucial roles in navigating this market.
Yeah.
And we can't forget the importance of staying informed and adapting to the constantly evolving landscape of regulations and technology.
So where does this leave us? I mean, do you think knowing this investor took a big gamble on that altcoin makes you more or less interested in, like, exploring crypto yourself?
You know, that's for you to decide. Hopefully this deep dive has provided you with some, like, valuable insights and giving you a framework for thinking about crypto investing.
Sure.
It's not a get-rich-quick scheme, and it's definitely not for the faint of heart. But if you're willing to put in the time and effort to learn, understand the risks, and develop a solid strategy, it can be a really exciting and potentially rewarding opportunity.
Couldn't have said it better myself. Remember, knowledge is power, especially when it comes to your finances. Thanks for joining us on this deep dive into the world of crypto investing. Until next time, happy investing.